A Friday surge helped Dalal Street end with gains of close to about 0.5%, with IT leading the charge. PSU banks, FMCG were the biggest laggards. On today's edition of Editors Roundtable, we'll put the spotlight on the week gone by. We'll also talk about the correction seen in FMCG stocks and why the current bull market has become the longest in India's history. I'm Reema Tendulkar. With me are Nimesh and Nigel, and joining us right here in the studio is none other than Prashant Khemka, founder, MD of WhiteOak Capital. Hi Prashant, good to see you here.
My pleasure. Thanks for having me here.
Thank you, Prashant, for joining us. Before you do the little market setup, I just wanted to add a line that, Prashant has now managing close to $10 billion of, capital. So when he left Goldman, I congratulated him a couple of years back. And, we've discussed in the past as to what led to a big move and all. And Prashant, have you ever thought that after leaving Goldman, in a few years, you'll reach your own fund would be like a $10 billion fund?
So it's more than a couple of years now. It's seven plus years. But
yes.
To be honest, not this quick.
Yeah.
Had obviously expected over time, but the markets have been very supportive, and obviously the team has done a good job in delivering returns to clients, and thankfully the clients have put their confidence in the team.
We're taking a look back at the year gone by, right? 2024, and it's been a good year. But I remember when we started the year and we used to ask all our experts, right, what's the outlook for the year? And they said, well, we've got 7-8 good years on the trot. You can't expect that kind of a return. Maybe this is the year when you have moderate returns. Well, it's not played out like that.
True. Well, it's been a fantastic year. We are now, 17, 18, 19% or so on the broader BSE 500, which in the longer scheme of things, when I think it's more reasonable to expect low double-digit kind of returns, it's a very good outcome. Yeah. Obviously, the smaller cap indices have done a lot better, twice as much. Now, at this point, I think it's unreasonable to expect a repeat of a year like this next year.
Yeah.
So probably the same message you'll get from people like us about next year, what you might have heard last year. But yes, it's been a very good year in hindsight.
Well, markets have a knack of surprising, right? And today, Friday was one such session. At one point, we were bleeding. The Nifty had broken 24,200, and then it came back roaring.
Well, that's right. Prashant, just first of all, congratulations on this feat of $10 billion. I always look at the markets and I try to learn about life lessons as well. And you're always approachable, and that's another quality that stands out. So learning about markets, learning about life as well is something that we have the privilege of when you come on our show. Well, let's talk about the markets in the past week then. The markets actually were buoyant, though pockets of the economy are a little bit soft. But what's telling you that the mood is very, very good is take a look at the small cap index. The small cap index is at a fresh 52-week high. We keep talking about the Nifty 5-6% away. Small cap index is making fresh highs, and that's what happened inter-week itself, which is telling you that the bulls have their mojo back into the market. The Fed futures, well, they are indicating that rate cut, and that's likely in the next week itself. However, the dollar index continues to strengthen, so that's leaving one end, open-ended. And we had a few guests that came on even during the week who said, maybe we may have to skip this rate cut. Let's see how that goes, but otherwise I think the equity markets will be a little bit disappointed. Moving to the flows have turned around, because in November, we had net selling from the FIs were close to $2.5 billion approximately. And that was courtesy some of the primary market inflows. Otherwise, the net sell number would have been far higher from the FIs. But this time around, things have turned around, because October as well as November, we did see net outflows from the FIs. And in the month of December, actually, India is outperforming, because the buy number is close to around $3 billion. You compare us with some of those Asian markets as well, and we're at least getting some inflows. So it appears that breakup that we had with the FIs, we seem to have patched up, and now we're seeing those flows, which is pretty much good news. The bulls, though, I think they'll be missing those FI shorts in the system. One point of time, we had 1.5 lakh contracts on the short side, which almost went to 2 lakh contracts. And then in the last week, it came down to around 40-50,000 contracts. But now they're building some short positions, which I always say is not such a bad thing. Domestic inflows as well continue unabated. The SIP numbers at around 25,000 crores. Heartening to see everyone backing up this market, and the domestic liquidity is holding one end up. Finally, what do we track from here on? Earnings recovery. Earnings have been disappointing in the first half of the year. We'll wait by for earnings recovery. We'll wait by for central bank action, both from the Fed as well as from the RBI for the second half of the year. And the capex spend as well, something that's picking up, which should hold us in good stead. So that's all the cues you need to watch for the second half of the year. Well, Prashant, the equity markets are very, very buoyant. And we are thumping the table. I'm feeling good. My SIPs are giving me decent returns as well. but the economy pockets of that are slowing down. Reema's going to talk about the FMCG space. So suddenly you're hearing about softness from FMCG sector. Those Zomato and Swiggy are saying, no, things are very good. I look at the auto space as well. Two-wheelers are saying sales are very good. But PVs, CVs, we're seeing a build-up out there. How are you reading about the state of the economy as of now?
So see our assessment, and we are not a macro shop, as I've often said, and would like to give that caveat. But our assessment is, I think, broadly in line with what the consensus or market's assessment is, that this is more of a temporary lull, low point in what is otherwise a healthy growth period, which has continued for several years, and we do expect some of this slowdown was related to the election that we had middle of the year. Consumption has been weak, but post a robust monsoon season, we do expect that to turn around. Rural consumption has picked up, as we're hearing from FMCG companies, though urban at this time is somewhat softish. But we do believe going into next year, that economy should be in better shape than where we are today.
Prashant, I want to ask on a couple of themes. I'll start with the first theme, which is the extended bull run for Indian equities. This week marked the longest bull run for Indian equities. It has overtaken the 2003-2008 bull run as well. But in terms of returns, it's 1/3 of what we saw in the previous bull run. You've seen many bull and burst cycles. Given your experience, the way you're looking at the markets right now, what's your sense? There is also an expectation that 25 next year could be a bit of a muted year. What's your sense on the overall markets, and which are the pockets where you are bullish on for the next year?
Certainly. So I'd say post-November, I am more upbeat. Internally, I feel more positive about the market. We're not a market timer or anything of that sort, but the undertone, we believe, should be firm. And what's happened during November is Trump got elected in US, and we had state elections, very crucially in Maharashtra, but also in Haryana, and by-election in UP. So the current mood in these two largest democracies and the two of the largest economies and two of the largest equity markets in the world is that they're strongly supported pro-growth leaders. You can fault Trump for anything you want to fault for, but certainly believe he is positive for equity markets. US is the largest equity market in the world. A stronger US corporate sector that does translate into stronger equity market, that has a big uplifting force on markets globally, including emerging markets and particularly India. While there are some puts and takes for other countries, and maybe for China it may not look as positive to have Trump back, going by Trump's posturing and actions towards China in his first term, but that is indirectly positive for India. So this whole China plus one and the diversion of global manufacturing on the margins, but away from China and towards countries like India, actually started 2015-16, when, in true earnest, when Trump started talking about negatively about China and tariffs and whatnot. So that, I think, is a positive force for global equity markets. And here in June of this year, there was a bit of a shocker or a disappointment to market men. The election outcome wasn't completely in magnitude in line with what was expected, and so the market had started moving sideways. The outcome of the state elections in a way offsets that disappointment from, again, market men's perspective, and it's again a pro-growth vote. We believe that the market is, the people have given.
I believe Trump has invited Xi Jinping for his swearing-in ceremony. Now the question is whether he accepts it or declines it. But what would be the key bets now going into 2025 for you?
So see, again, we are very bottom-up driven, and we find opportunities in almost every sector. But at this time where we are, where the portfolios, the team have greater allocations, are, if I were to start with the largest sector, banking, the larger banks, or even larger NBFCs, also certain capital market intermediaries. Now, a lot of them have run up quite a lot, but there's still select opportunities, very strong business models that benefit from this longer-term financialization of savings and channelization into equity markets. In IT services, we've always had good success, I would say, in mid and small cap IT services, and even today, we find some very attractive mid caps and small caps, strong execution, performing very well, and available at very attractive valuations still when you look at cash flow multiples rather than PE multiples. In healthcare, I would say across the market cap spectrum, there are good opportunities. So, large cap banking, mid and small IT services, healthcare across board. And beyond that, then there are specific opportunities in consumption. Again, small caps in consumption, there are several opportunities. And then we have investments in ITs, in consumption industrials, as well as telecom, chemicals, and so on.
Prashant, a word on private banks. If you can elaborate more on what makes you so bullish, because it's been a bit of disappointment, right? Last 3 years have been a disappointment for all the large private banks. What could be the trigger in next year? Whether it will be rate cuts, whether it will be growth picking up or credit costs falling down? What are the few things that you're watching out very closely?
Certainly, from a returns perspective, private banks, the larger banks, by and large, as a basket, though there are some better performers there as well, by and large, yes, they have been a bit of a disappointment. But when we look, and we do manage global emerging markets funds as well, and so when we look at banking sector around the world, be it Latin America, other countries in Asia, EMEA, including Middle East, the combination of growth, which still can be expected to be in the mid-teens over time for private sector, both on deposits, advances, let's say low teens to mid-teens, combined with ROEs or profitability in the mid-teens, and combined with, equally important to these first two, strong balance sheets. This combination is most powerful we find in India. And in that context, the valuations are very attractive. Valuations are, I would say, at lower end of the historical range.
Indeed.
On a relative basis, relative to the rest of the world, rest of the emerging market, and relative to their own self is not maybe at the low end, because there have always been times of crisis and so on. But compared to the rest of the market, I would say that the banking sector valuations relative to their own past are also at a more moderate levels. It's more towards average levels.
Fairly reasonable, one would say.
Fairly reasonable.
Prashant, I wanted to ask you about the bruised blue chips, borrowing a term from Mr. Agarwal, who joined us earlier. What about paints? The largest paint maker in there has not given any returns. There was a new entrant that came in there. But how are you approaching this space? Because, we had Berger Paints, and they were guiding for 7 to 8% in this quarter. Now they've scaled it down a little bit. So clearly there is a problem. The growth isn't as much. But some of these companies, they've corrected a goodish bit from the top. So your view?
Certainly. So first, I'll just say a line or two about the bruised blue chips. I think it could be time for quality to do well again. Pretty much starting from December 31st, 2020. So coming to 2021, 4 years now, or at least till June of this year, quality underperformed what's referred to as value. Now, value, I'd like to say, has two components: what is true value and what is value trap, or what is junk. Most of junk also falls in value. So you can think of junk outperforming quality since the beginning of 21 till June of 24. But when you look at performance from June of 24, and there are several indices that track these quality value, they show a marked turnaround now in relative performance. Quality hasn't beaten value by huge margin since June, but it has stopped underperforming. It is modestly outperforming. And I'm hopeful, self-interested maybe, hopeful that this is more of a structure, meaning a longer lasting turn. After 3.5 years of underperformance of quality, maybe at least the underperformance would now even out, or might even outperform, given that the valuations have become...
What will fall into the quality, according to you? Which are the pockets which you think are rightly in the quality basket which would do well? Private bank, of course, is one, I believe.
Yes.
Which are the other pockets?
Paints?
So now when I talk about quality value, not every sector, every sub-segment necessarily would have done poorly or would do well, but yes, FMCG, consumer would broadly fall in that. Healthcare would fall under quality. It's 80-20 rule.
Yeah.
Not everything in these sectors are high quality, and not everything in, let's say, utilities or commodities or such sector, not everything is poor quality. Yeah. But yeah, by and large, 80% in sectors like IT services, private sector financials, healthcare, consumption, we'll say are more quality orientation.
Well, indeed, for the last 3-4 years, it was a rising tide which lifted all boats. But now you are going to see the men separated from the boys. But hold that thought. We're going to slip into a very short break. But we'll come back and continue our chat with Prashant Khemka. Don't go anywhere.